Hi and welcome back to the channel. So a few days ago I asked my followers on Instagram if they have any questions regarding Bitcoin or cryptocurrency or blockchain technology, and we received some questions. So in this video I'll answer those questions, and if you have more doubts or you have more questions, feel free to reach me on Instagram or Twitter. So our first question is from Sanj Boy, and he asks, what is Bitcoin and how can I get some? So Bitcoin is a cryptocurrency on a decentralized blockchain network, which means it is immutable. That is, all the data that is stored in the blockchain network cannot be changed, because even if you change data in your computer or in one particular computer or group of computers, all the other computers in the network have the exact same copy of the original data, and they can verify that you have changed something, which means you are trying to do something malicious. So unlike the fiat currency or government issued currency, the supply of Bitcoin is fixed. That is, no matter what, no one in the world can change the supply of Bitcoin from maximum supply of 21 million coins to either more than that or less than that. But in our monetary system that we have right now, government has control over the money, and they can increase the supply of money whenever they want. For whatever reasons, it can be for good reasons, for bad reasons, but at the end, those who are holding the money, those who have money in the form of dollars or INR or any fiat currency, the value of that money goes down. Now, I'm not saying printing money is bad. It depends on how much you're doing it, but in the long run, those who are holding money will definitely lose their value. Now, if you want to know more about Bitcoin and why it matters, I've made a video about it, and you can find the link to it in the description. Also, it will be available in one of the corners. Now, the other part of the question, where can you get some Bitcoin? So, you can buy Bitcoin through centralized or decentralized exchanges. You can even buy Bitcoin directly from miners, but I don't think that's an option for most of us. The most common option is to buy it from a centralized exchange and store it in a hardware device if you want to hold it for long term. But if you just want to trade and earn profits in the short term, then it's totally fine to use a centralized or decentralized exchange, and then whenever you are comfortable with taking out the profits, you can directly send it to your bank account. I have left the link to a lot of YouTube videos and YouTube channels in the description, which will help you out in this process, how you can buy Bitcoin, how to transfer it from a centralized exchange to a hardware device, which hardware device you should buy, which centralized exchange or decentralized exchange you should use, and all those things. So our second question is from Sanjay1998, and he asks about taxation. So first of all, taxation depends on which country you are living in. So I'm just going to talk about India. So because I'm not someone who has a financial background and I don't have much knowledge about taxation, I'm going to read out some points from an article. So this article was updated on 4th January 2021, so it's fine, it's just 1 month old as per this recording. So yeah, as per the provisions of the Income Tax Act, individuals having income of more than 2.5 lakhs have to file income tax returns. First, it's important to know that the gains derived from the sale of cryptocurrencies can be classified as either capital gains or business income. This classification will decide which tax return form one needs to fill and how much tax will be levied on the gains. So if you're mining cryptocurrencies, that will be considered as business income. Also, if you are trading cryptocurrency, that is buying and selling in short intervals, that is within few days, within few weeks, within few hours, then that is also considered as business income. So you will be taxed based on that. Therefore, the gains made from investing in Bitcoin or virtual currencies are taxable as capital gains. And to calculate the capital gains, one needs to first calculate the period of holding. If investors hold cryptocurrencies for 36 months or more, the gains would be taxable as long-term capital gains, and less than 36 months, it would be short-term capital gains. Short-term capital gains are taxable as per the slab rates applicable to a taxpayer, and long-term capital gains are taxed at the flat rate of 20% with the benefit of indexation. Sorry, I had to go somewhere, hence change of clothes. So anyway, I forgot to mention one thing. So any form of income which does not fall under the exemption category, so there is already an exemption category which has all sorts of income defined under it, such as pension, for which you don't have to pay taxes. But anything that is not listed there, you need to pay tax for it. So thus cryptocurrency is not listed under the exemption category, you need to pay tax for cryptocurrencies. When it comes to filing ITR, Individuals having taxable income more than 50 lakh have to mandatorily fill in Schedule AL in ITR forms, which contains information related to investments in mutual funds and securities including cryptocurrencies. Moreover, if a company or partnership firm has made an investment out of their business funds into a cryptocurrency, then it is mandatory for them to show it in their balance sheet, as they have to follow the accounting standards. So basically, if you're trading, you fall under the business income category and you need to pay tax according to that. Contact your advisor or your CA and ask them how it's all done, because that would be a better option. I would leave some videos about it in the description, or you would like to know how it's done, how it works, then you can use those resources. Now, I know some of you might be wondering what happens when cryptocurrencies get banned, because there's a news that cryptocurrency can get banned anytime. So about that, so even in a situation where cryptocurrencies get banned, you will be given at least a 90-day period where you can take out your funds from cryptocurrencies, convert them into INR, and then pay tax on the profits. So you don't need to panic and sell everything right now. Just keep it with yourself. By the way, right now it's not even decided that it's gonna be banned. It's just in the news, it's just in the draft. It may get banned, it may not get banned, and even if it gets banned, you will be given the 90-day period. So don't have to panic and sell everything right now. Another thing is that the current bill talks about cryptocurrencies as a currency, not as a tradable asset, which means that the ban is only on using cryptocurrencies as a medium of exchange. So you want to buy, let's say, a camera, for that you use cryptocurrency, that is going to get banned, but not as a tradable asset. So you have, for example, let's say 10,000 rupees lying around and you just want to invest in something which you think is gonna go up in the short term or long term, or you just want to save your money, don't want the inflation to reduce the purchasing power of your money, so you put it in some asset. That thing is not banned, only the currency part of it is banned. I mean, they are talking about banning that part. So here's what Mr. Subhash Chandra Garg has to say, the guy who created the draft for the ban.
See, the problem is that the cryptocurrencies, starting with Bitcoin, initially evolved or came up as currencies. They were meant to facilitate international payments. They were meant to take care of the transfers of money from one place to another. At that point of time, actually, the asset part of it was very, very low. And that is why it's called coin, it's called currency. But over the years, I think its role as currency has diminished, has become smaller, and this has become more of an investment into asset kind of thing. So I think if this community ends this sort of confusion and sort of evolve this purely as an asset, not as a currency to be part of the payment or transfer system, I think the bill only targets cryptocurrencies as currencies. It doesn't deal with cryptocurrencies as assets.
So the next question is from Archit Asawa. Alternate applications of blockchain. So in this video, I'm not going to explain what blockchain is. I've already made a video about it. I'll leave the link to it in the description. Also, you can find it in one of the corners. So please watch that. So we just talk about applications of blockchain. So blockchain is simply a data structure, but let's look at blockchain when it is in a decentralized network. That's the most interesting use of blockchain. Otherwise, it's not that useful. So one of the key points about blockchain in a decentralized network is that it provides trust without trust. Now, if you're wondering how that happens, again, watch that previous video. We have discussed it. So let's look at a company called Efforts, co-founded by Steve Wozniak, who also co-founded Apple. So what Efforts does is it provides a way for you to trade energy. So you have solar panels, and these solar panels generate electricity. Now you use all the electricity that you need in your house, but what do you do with the surplus? Let's say you store some of it in the battery. Now your battery is also full. What do you do with the surplus? You can trade that energy for a token. Now this token represents some amount of energy. So I sell that energy for a token. Now I can use this token to buy energy. I can use this token to, you can sell this token for dollars or for fiat currency, or for other cryptocurrencies. So basically FOS allows me to trade electricity. So I recorded the video, but for some reason it got corrupted. So through FOS you can sell electricity to the grid and receive tokens in exchange of the electricity. Similarly, you can tokenize literally anything with a price tag. You can tokenize gold, you can tokenize computers, you can tokenize art, you can tokenize building blocks, you can tokenize even collateral. So let's take an example of collateral. So for example, I want to borrow some money. I want to borrow, let's say, $1,000. To borrow $1,000, let's say I need to put some money, some value in collateral. So let's take the same example of FOS tokens, which has symbol WOZX, WOZX. Now I pay the 700 WOZX as collateral to receive $1,000 for loan. Now even that collateral can be tokenized. So I will actually receive $1,000 as a loan plus 700 X token. That X token represents 700 WOZX collateral. Now I can do whatever I want to do with that money which I have borrowed. So let's say I spent 200 X tokens and now I have to pay $1,000 plus some interest plus that 500 X tokens to receive my collateral back. So I pay $1,000 back plus some interest in whichever agreed upon currency, and I pay that 500 X tokens back. So for 500 X token, I'll receive 500 WOZX token. I won't receive the whole 700 thing because I've already spent 200 X tokens. So you get the point. In traditional system, it's not possible to receive a token for collateral. But in a blockchain based system where the money is going into a pool, so basically there's a pool and a lot of money is there, and there are a lot of players and they can take out money anytime, they can borrow money at any time. And the reason it works is because unlike bank, blockchain has a very good settlement layer. So in a bank it takes more time for everything to get done. You need to make sure that you own that much money. So it might be confusing if you don't understand how it works, but blockchain has a very good settlement layer. So let's look at another example of smart contracts. Now smart contract is a self-executing code. It executes upon a certain condition. So I'll give you an example. There's literally a company which is doing this, by the way. So in the construction business, what happens that when people are trying to construct some house, it requires a lot of capital. So there are different stakeholders which need to be paid. For example, if I'm an owner and my construction is going on for my building, and if I don't pay them in time, then they won't work properly, then the project will take longer, they will lose trust in me, and then there's a chance that they may leave the project, or there's a chance that they don't trust me, and the project won't continue basically. And the another possibility is that I might think that they are cheating me, they are deceiving me, and they are using inadequate quality material, and all those things can happen. So there is a company which is trying to solve this issue. I have written about them extensively in my blog post, so if you're interested, there's a link in the description, you can read it. So what this company is trying to do is they are making self-complete blocks. So instead of using bricks and then using mortar and then using like other things and then painting the building at the end and doing all this process, the self-complete blocks are, as it says, self-complete, which basically means everything from piping to the structure part of it to wiring to paint, or everything that is required to make a building is already made in factories. You just have to take these blocks. Oh, one more thing. So these blocks are embedded with IoT devices, and you can use robots to track them and then place them properly. It will aid in construction. You can turn them off after the construction is done, and it depends on you. So these blocks, you can tokenize them and put them in blockchain. So now anyone can own it from anywhere in the world. Anyone can sell it to anyone in the world. Plus, when the construction is taking place and let's say some amount of construction is done, then the code will automatically execute through smart contracts and people will be paid. Now you might think, how would those people trust me and all those things? So it will happen in blockchain. So in blockchain, everything is visible. They are able to see that I have already paid in the smart contract, and that smart contract is visible to all the stakeholders in a private blockchain. So they can see that I already paid in the smart contract, and if this amount of work gets done, then in that much time, then they will get paid. If it takes longer, then they if there's some amount to be deducted, like it's basically depend on the agreement which happened. You can code smart contract in that form. So yeah, when the construction of building is done in phases, the payment is automatically done, and yeah, everything is fine, everyone is happy, everyone can trust. So that's the another application of blockchain. And another thing is you can create private blockchains on top of other blockchains. So this is something which Polkadot is trying to do. Polkadot is a blockchain network on top of which you can create your own private blockchains, because you may not want everyone in the world to see what you're doing. So that private blockchain will only be accessible to certain people whom you want to make it accessible to. So basically, blockchain is a data structure. You can store anything in it. Now you can put that blockchain in a decentralized network so that everyone, whoever you want, can view it, and then you can create applications on top of it. So basically it will create trust without trust. So this infrastructure can be used for a lot of different things, and our financial system is currently rigged, so this infrastructure is basically lifesaver. So yeah, that's it. That's the application of blockchain. If you have any doubts or more questions, you can reach me through Instagram or Twitter. You can DM me. And I know if you're not aware of smart contracts or blockchain technology or other cryptocurrencies, you might be confused. You will be confused a lot. But I can't talk about everything in a single video. I'll leave a link to all the resources you need to learn about this in the description. So make sure to go through description. And if you have more questions, reach me out through all the resources. I already said that. So you can also ask through comment section below. And yeah, that's it. Thanks for watching.